In this video, I'll talk about the latest warning from Dogecoin founder Billy Markus, who talked about one key factor that has led to Dogecoin's rapid fall since last year. Billy Markus has tweeted what he reportedly feels is the key reason why interest in Dogecoin has significantly declined since summer 2021. Markus uploaded a snapshot that demonstrates a significant drop in Doge-related search inquiries on the most prominent search engine. The graph reveals that although widespread interest in Dogecoin peaked at 100 in June of last year, it has since dropped to 25 by May 2022, a drop of about thrice. Doge's high degree of attention last year was sparked by the meme coin's all-time high in early May. He noted that when the price of the coin is high, there is a surge in public interest in cryptocurrency in general. When it falls, as it is today with Doge, Bitcoin, Ethereum, and the bulk of the cryptocurrency market, the curious lose interest in these coins. I think Billy is trying to suggest that the popularity of Dogecoin might decrease even more if Dogecoin's price decreases even from here. And I think it's pretty much inevitable, at least in the short term, because of cryptos delinking from the stock markets. We saw the stock markets rise 4 days ago, but nothing of that sort happened with cryptos like Doge. The point is that this decreasing popularity of Doge could start a vicious cycle of even more slashes in Dogecoin's price. A decrease in price will lead to a decrease in popularity, which would then lead to a decrease in price, and so on. But still, we need to talk about the latest update for Dogecoin. With the release of the latest Dogecoin version, 1.14.6, the primary creators of Dogecoin intend to rewrite the narrative. On June 6, a GitHub link including a checklist of what needs to be accomplished with the proposed 1.14.6 network update was distributed. Some of the assurances of the 1.14.6 upgrade to the network, developed by Patrick Lauder, a core developer of the Dogecoin network, are to assure the safety of users' wallets on the network. The upgrade would also try to address any vulnerabilities in the Dogecoin network that are common to the Bitcoin network. Furthermore, Lauder mentioned that one purpose of the upcoming upgrade is to make the Dogecoin core wallet more affordable. Lauder said the changes to the Dogecoin network may be deployed by the end of June in a Reddit post 8 days ago. He said, "It is beginning to seem like we will be able to release 1.14.6 before the end of June. We'll be focused on allowing as many contributions as possible to make it into the release, along with the network hardening I stated before, which not just I but also Chromatic are working on. I'll establish a release tracker so everyone can see where we're at." Now let's move on to some great news. So PayPal said on Tuesday that crypto users may now transfer cash away from its platform, a long-awaited feature that will make the company's offering more comparable to other prominent cryptocurrency services. PayPal's officials also said, beginning today, PayPal accepts native cryptocurrency transfers between PayPal and other wallets and exchanges. The option to make external transfers on PayPal's crypto platform will begin rolling out to users today and will be available to everyone in the United States over the next week or two. PayPal originally debuted its crypto service in late 2020, enabling customers to purchase, trade, and keep for cryptos, but not send the money to other destinations such as MetaMask, Coinbase, or hardware wallets. The fact that customers may now do this is crucial because PayPal, which also owns the popular app Venmo, is used to move money by hundreds of millions of people worldwide and is increasingly utilized by retailers as a payment platform. The company's SVP of blockchain and crypto said, "We're in crypto because we believe a significant amount of business will shift to digital currencies." Also, Citadel Securities, the market maker controlled by billionaire Ken Griffin, is collaborating with a high-frequency trading business to develop a Bitcoin trading ecosystem. According to a second source, Citadel Securities has been quietly employing executives to build up a crypto trading stack. Griffin told Bloomberg earlier this year that he had modified his anti-cryptocurrency attitude and that his business would start trading digital assets. He also said, "Crypto has been one of the great tales in finance over the course of about the last 15 years. I'll be transparent, I've been in the naysayer camp during that 15-year period." Moving on, let's look at some new data for Bitcoin, considering that the correlation between Doge and Bitcoin is so high right now. So according to Glassnode's most recent weekly report, long-term holders' dominance has lately increased. The essential metric here is supply and profit, which reflects the total amount of coins in the Bitcoin market that are now profitable. The measure works by looking at each coin's on-chain history to discover what price it was last sold for. If the former price was lower than the current one, the coin has now made a profit. On the other side, the previous selling price being more than the newest value of the cryptocurrency would imply that the coin is now losing money. Naturally, the supply and profit indication only gauges the former sort of currency. Here is a graphic that indicates what proportion of this profit supply is owned by long-term investors. If you don't know, long-term holders are investors that have kept their Bitcoin for at least 155 days without selling or transferring it. The group of people who have been holding for less than a year is referred to as short-term holders. So the proportion of supply and profit controlled by long-term holders appears to have surpassed 90% in the recent few weeks. This signifies that the percentage of short-term holders has fallen below 10%. And then another great news came out today. So following 16 months of heated pretrial litigation, countless hours in court, and over 600K documents scrutinized by both parties, the case dubbed the cryptocurrency trial of the century might all come down to a speech given 4 years ago by a former Securities and Exchange Commission officer. That issue, of course, is the SEC action against Ripple, a payment settlement business, filed in late 2020. The SEC claims Ripple violated securities laws by failing to register sales of its native crypto token, XRP, which helped finance its platform and allow payments on Ripple's network with the agency. And so a decision on this is going to be big for the entire crypto market. Coming back to data, the Bart-Simpson pattern appeared for Bitcoin today. It is a short-term chart pattern that is distinguished by a rapid rise on a shorter timescale, such as 30 minutes or an hour. A period of sideways movement is followed by a rapid pullback that wipes out all prior gains. The development of the BART pattern, according to trader James R.K., is sometimes correlated with institutional manipulation. He cautioned that manipulators plan to take advantage of retail traders and complete their opposing orders. Talking about institutions, the last week saw a disappointing performance from institutional investors in terms of altcoin inserts. Ethereum, which has seen ongoing outflows, will be refused mercy once more. Another 32 million had left the cryptocurrency, continuing its outflow pattern. This was the digital asset's 11th straight week of outflows. For the previous week, no cryptos have had any inflows. However, institutional investors continue to be optimistic about multi-asset investment solutions. They received 4.3 million in inflows for the week, extending their inflow streak during the market downturn. Inflows into digital asset investment products totaled 100 million during the last week. The majority of the inflows had come from the Americas, with 88 million alone arriving from this area. The European partners had contributed 11 million to the total. Year-to-date inflows are currently 570 million, while outflows from investors are 41 million. Last week's total inflows boost the overall assets under management to 39.8 billion. These numbers indicate that institutional investors are shunning altcoins in favor of the security provided by Bitcoin. Also, for the first time, Goldman Sachs included questions on crypto in its recent study of the insurance industry. Top global asset managers' responses suggest that they are gradually recognizing crypto assets as investments. The use of digital assets by insurance industry investors has been closely monitored. Mass Mutual Insurance Company will invest 100 million in Bitcoin in December 2020. According to the survey, despite its tiny size, insurers' interest in cryptocurrencies is expanding. The report also said, the majority of insurers do not want to invest in cryptocurrencies. American insurers are slightly more interested, with 11% currently investing or considering investing in cryptocurrencies, compared to 6% for Asian insurers and 1% for European insurers. Yet, this level of interest is still notable. The study asked respondents to choose 3 asset types that they believe would provide the best returns in the following 12 months. 6% of respondents, or 20% of those polled, chose cryptocurrency as the first option, while 9% chose the asset class as one of the top 3. When asked to choose the 3 asset classes that would provide the lowest overall return in 12 months, just 16% chose cryptocurrency as the first option, with 22% ranking it in the top 3. Also, although the crypto meltdown is unsettling, the crypto community maintains its positive attitude on the Ethereum price by June 30. They expect it to increase by 78% by the end of the month. The CoinMarketCap community predicts that ETH will be worth $3,140 by the end of the month. This newest project has received over 15,362 votes and has an accuracy rate of 65%. In terms of investor interest and trading value, Ethereum has been gaining traction. Ethereum's transition from a proof-of-work to a proof-of-stake mechanism might be at work. Coming back to Dogecoin, Jeremy DeVinci, who is a well-known Bitcoin enthusiast and an early crypto user, has become a Dogecoin bull now. 9 years ago, he used to be a Bitcoin bull, but today he said that he sold everything except Doge and Shiba Inu. Another important thing for Dogecoin is that it is trading very close to its 10 and 20-day moving averages. Once the latter has been crossed, it'll be significant for Dogecoin as it could propel Dogecoin's next rally.